I'm sure by now most people are familiar with the news that Russian troops are building up around the Ukrainian border, and there's a significant amount of uncertainty surrounding the European region. Well, today we're going to discuss the question, what's happening in Ukraine? Why is this all playing out? And then what are the potential implications that could flow through to markets and the global economy? Of course, it's at a pretty tense standoff at the moment. Neither side is currently making any moves and the world is watching to wait to see what will happen. Nobody has any answers at this current moment. Nobody knows how this situation will play out. But today we're going to have a broad-based discussion talking about these different factors. What are the potential range of outcomes that could flow through from here? I guess to have that bit of a context at the moment, depending on which news reports you're reading, there's over 150,000 troops assembled on the border. Putin has ordered his troops and there's drills and exercises going on in different regions surrounding the border. Of course, Russia and Ukraine share a border there, but there are troops at different locations, as you can see from this visual on the right. Over this past period, Putin sent a list of security demands that he was aiming to have met. We'll look at this later on in the video. And it is worth noting that as the situation becomes more tense, staff are currently being evacuated from Ukraine, from a range of different regions and embassies, and field hospitals and infrastructure is being set up in these borders as well. Of course, potential sanctions and repercussions on an economic front have been discussed both from NATO and an EU lens, and a lot of this is still very, very uncertain, but it really does have the ability to impact the broader macroeconomic space surrounding all of these areas. And so just having a look at this Russian list of demands that Vladimir Putin is hoping to have met. There was 8 different articles and they surround security demands and security guarantees that Russia was aiming to have. Of course, I'll let you read through these in your own time, but it is worth noting that this is a lens, this is the perspective that Russia is focusing on with the diplomacy discussions. As we know at the moment, the outcome that the parties and all of the interested stakeholders at the moment want to reach is an amicable solution where there is no conflict and there is a de-escalation of tensions. It's very tense, it is uncertain at the moment, but the world is currently waiting to see how this will play out. And I'm sure through your research, through your time looking at this space, you might have heard the phrase NATO, and you might be wondering, who is NATO and then why is it so important? So NATO is the North Atlantic Treaty Organization. It was founded in 1949, which was after World War II. It's currently got 30 member states, and this has continued to grow. As you can see from the visual here on the right, the NATO members are in blue, but there's a range of supporting parties as well, and partners that support the NATO offering. NATO is an intergovernmental military alliance. I guess for a bit of the background, when the USSR fell, many former USSR states became independent. Ukraine is one of those states, but Ukraine has very close ties to Russia, both on a social and a cultural lens. And there is actually still a large population of ethnic Russians that are living within Ukraine. And this has always been quite a key relationship that Russia is focused on with Ukraine. And so one of these key objectives out of the demands is that Russia does not want Ukraine to join NATO. Ukraine is not currently a member of NATO nor the EU. However, Ukraine does have a focus that eventually and has mentioned previously that they would like the opportunity to join NATO. There's a range of potential partner countries that have stated that they would like to join NATO but have not yet met the requirements or have not yet entered, and Ukraine is one of these. But this is something that Russia does not want to happen. Along with this as well, Russia is aiming for a cessation of NATO's activity in the Eastern European region. And so some of these are the demands that Russia is trying to focus on, but it's worth noting that Ukraine and Russia have these very close ties. And this is why, at the moment, there's so much tension, but so much importance as well being played out on this Ukrainian region. And so, of course, with that uncertainty, nobody knows how this will play out. Will Russia eventually invade and trigger a conflict? Or are they currently just posturing around, developing out their troops, but eventually may pull back? This is the uncertainty that's gripping markets, but there are a range of implications for nations around the world. Now, I think before we discuss the market and economic impacts, I think first and foremost, it is most important to remember that underlying every discussion we really have on the markets is the humanitarian lens. Really, the market and economic impacts in any discussion is always going to be secondary. I think often we can fall into the trap of just talking about numbers, whether it's unemployment or different trends or different supply-demand dynamics. Just think about them as numbers, trends, lines on a chart. But in fact, every discussion that we have on markets, not isolated to this one, but every discussion we have on markets is talking about humans and the world around us. And so I think this is the most important thing when we're thinking about this space. But then thinking about the market and economic impacts. Of course, the NATO and EU sanctions, if there is an invasion, could be potentially significant. Nobody knows exactly how these will look, but there has been mentions that basically everything is on the table. And of course, these have the ability to significantly impact the Russian economy. It is worth noting that Russia is a major supplier of energy to the European Union. In fact, it's up as much as 1/3 of Europe's gas supply comes from Russia. As a result of that, of course, if there's uncertainties about supply, as we know with Economics 101, if demand stays the same but supply is potentially reduced, then prices will rise. And as we've all seen over this past period, with rising input costs, these can be inflationary. And of course, with inflation, a key narrative at the moment on the markets. Any uncertainties about potential heightened inflation and what that could mean for markets is going to spook the markets a little bit further. It's also worth noting that not only for the energy, but Russia is a major trading partner of the EU. Countries like Netherlands and Germany as well have a significant trading rapport with Russia, but many of course of the countries do with their proximity. And it's worth noting too that grain supply flows through the Black Sea, which is bordered by Russia and Ukraine. And of course, the same way that potentially any supply risks to the energy side, risks to the grain side could mean that there could be rising food costs as well, which of course is going to be inflationary around the world. And of course, there are discussions about the uncertainty surrounding global growth. In 2014, Russia did invade and annex Crimea from Ukraine. And as we can see here, this was the GDP impact on the Ukrainian conflict 1 quarter after that had happened. We can see, of course, Ukraine was affected. Russia was affected with about a -1.5, -2% hit to GDP. However, the rest of the world was relatively unaffected, with Europe, of course, affected more so than the global effects. So it is worth noting that as we saw during the period in 2014, when we're looking back at that time, we can see there was uncertainty, there was volatility on the markets. Of course, it's a different time, as we know, as the quote goes, history doesn't repeat, but it often does rhyme. There's a range of different impacts and a range of different factors that were contributing into the markets then, but there was uncertainty. The markets was then able to digest it and carry on. I think before considering what happens from here, if you have enjoyed the video, don't forget to hit the like button. Make sure you've subscribed and turn your bell notifications on as well, so you won't miss any of our daily episodes. What happens from here? As we all know, the markets are currently experiencing elevated volatility. This is not isolated to the Russian situation, but of course, this is a factor that has contributed into it. When we're thinking back to the start of 2022, we've had one of our worst Januaries on record. The S&P 500 benchmark index is still down by 10% into correction territory, with many of the technology names down even further. Of course, the Fed rate hike cycle is still a concern at the moment. The market's just working out how to digest this rate hike cycle. Started in pricing 2 to 3 rate hikes, 3 according to the dot plots, then pricing in 4, 5, now upwards to 6 rate hikes. And so, of course, there is the additional effect of the tapering down of the bond buying program and then potentially unwinding of the balance sheet with QT. The market's just working out how to price everything that's playing out at this stage. As we've discussed, the energy sector is going to be one of those industries most exposed if anything does happen on the Russian front. But it is worth noting too that the midterm elections are this year. As we know, with midterm election year, they're often volatile, particularly in the lead up until the midterm elections. So this is just another layer on top that we need to view the markets with. I think it is worth noting, of course, pragmatically, that any invasion could and will scare markets. It wouldn't be surprising to see a steep sell-off in that session or in the sessions following any invasion. However, the question is, and a lot of analysts and economists have discussed it, potentially it could be short-lived, potentially it could be more persistent. And of course, that will depend on how the actual conflict plays out and what it looks like. Nobody knows and nobody has a crystal ball. But I think underlying all of it, it is worth noting and seems likely that uncertainty and volatility will likely persist. We've had this to start the year, we had it at the back end of last year. With so many different factors contributing into the market, the VIX has remained elevated to kickstart this year. It does look likely that we could be stuck with volatility for this upcoming period. I'm keen to know your thoughts on it all, so drop in a comment below. Let us know what your thoughts are and where do you think markets head. We've looked into a range of different broader macroeconomic discussions on the channel as well, so we'll leave links to those up above that you can check out after this one. Thank you so much for joining us. For now, stay well and happy investing.